a leap of faith. Can we truly insure our uncertain lives? From the moment we are born, we are thrust into a world of uncertainty. Each breath we take, each step we make, is a venture into the unknown. Life is a fragile thing. It can change in an instant. One moment, everything seems perfect, and the next, it can all come crashing down. In the face of this unpredictable existence, humans have always sought ways to mitigate risks. From the earliest days of our ancestors, we have been driven by the need to protect ourselves and our loved ones. We build shelters to protect ourselves from the elements. These shelters have evolved from simple caves to complex modern structures, each designed to offer a sense of security. We form communities to support each other in times of need. These communities provide a network of support, a safety net that catches us when we fall. And we create systems like insurance to safeguard ourselves from financial ruin when the unexpected occurs. Insurance is a promise, a contract that offers peace of mind in exchange for a premium. But can we truly insure against the unknown, or is it simply a leap of faith? Is insurance a foolproof solution or just a comforting illusion? This is a question that has captivated thinkers and innovators for centuries, leading to the development of sophisticated insurance mechanisms that have shaped our world. These mechanisms have evolved, becoming more complex and comprehensive over time. From the earliest forms of risk-sharing in prehistoric tribes to the AI-powered insurance models of the future, the journey of insurance is a testament to human ingenuity and resilience. The quest to manage uncertainty has been a constant thread in human history. It is a story of innovation, adaptation, and the relentless pursuit of security. Join me as we embark on a captivating journey through time, exploring the evolution of insurance and pondering the profound implications it holds for our collective future. Together, we will uncover the stories, the breakthroughs, and the challenges that have defined our quest to insure our uncertain lives. From tribal bonds to digital algorithms, a journey through insurance history. The story of insurance is a testament to human ingenuity and our enduring desire for security. It is a story that spans millennia, from the earliest human settlements to our modern interconnected world. Imagine a time before written history. Small tribes huddled around flickering fires, sharing not just stories and food, but also the burden of risk. This ancient practice of communal support formed the bedrock of insurance. As civilizations rose and trade flourished, so too did the need for more sophisticated risk management tools. The ancient world witnessed the birth of marine insurance, protecting merchants from the perils of the sea. Mutual aid societies emerged, offering a safety net for those facing unexpected hardship. The Middle Ages saw the rise of guilds, providing members with financial protection against illness, disability, and even death. Each step in this evolutionary journey brought us closer to the complex insurance systems we rely on today.
In the harsh realities of prehistoric life, survival was a collective endeavor. Every day presented new challenges, from finding food to protecting the group from predators and natural disasters. The harsh environment necessitated a strong sense of unity and cooperation among the members of the tribe. Small, nomadic tribes relied on each other for protection, food, and shelter. These tribes were constantly on the move, following the migration patterns of animals and the changing seasons. Their survival depended on their ability to work together and support one another in times of need. This interdependence fostered a deep sense of community, leading to the development of early risk-sharing practices. These practices were not just about survival, but also about building trust and strengthening social bonds within the group. The more they shared, the stronger their community became. These practices were often informal and based on reciprocity. There were no written contracts or formal agreements, but a mutual understanding that helping one another was crucial for the tribe's overall well-being. This unwritten code of conduct ensured that everyone contributed to the group's success. If one member of the tribe suffered a loss, such as the destruction of their dwelling or the loss of their hunting tools, others would contribute to help them recover. This collective effort was vital in maintaining the stability and resilience of the tribe. It ensured that no one was left behind and that everyone had the resources they needed to survive. This sharing of resources wasn't just an act of altruism, it was essential for the group's survival. By pooling their resources, the tribe could better withstand the challenges they faced. This cooperative approach allowed them to adapt to changing circumstances and thrive in a harsh environment. By spreading the risk among members, prehistoric communities ensured that a single unfortunate event wouldn't cripple the entire group. This risk management strategy was crucial in preventing the collapse of the tribe and ensuring its long-term survival. It allowed them to face adversity with a united front. Consider a scenario where a skilled hunter is injured. In prehistoric times, a hunter's skills were invaluable to the tribe, providing much-needed food and resources. An injury could have devastating consequences, not just for the individual, but for the entire group. Without the support of the tribe, this individual would be unable to provide for themselves or their family. They would struggle to find food, build shelter, and protect themselves from dangers. Isolation could lead to a rapid decline in their health and well-being. However, with the collective support of the group, they could rely on others for food and care while they recovered. The tribe would ensure that the injured member had everything they needed to heal and regain their strength. This support system was a lifeline for those in need. This example highlights the practical and essential nature of risk sharing in these early societies. It was a fundamental aspect of their way of life, ensuring that everyone had a safety net to fall back on. This cooperative spirit was the cornerstone of their survival and success in a challenging world.
Section 4. Sailing into the Unknown, Marine Insurance and Mutual Aid in Ancient Times. As humans ventured beyond their immediate surroundings, they encountered new and unfamiliar risks. Trade routes, particularly those traversing vast oceans, exposed merchants to the unpredictable wrath of nature. Ships laden with valuable cargo could be lost to storms, piracy, or navigational errors. This perilous reality led to the development of marine insurance, one of the earliest forms of formalized risk management. In ancient Mesopotamia, merchants would often pool their resources to mitigate the risks of seafaring. Contracts, etched on clay tablets, outlined agreements where investors would provide financial backing for voyages. In return, they would receive a share of the profits if the journey proved successful. However, if the ship was lost, the investors would absorb a portion of the financial loss. This system, known as bottomry, provided a rudimentary form of insurance, allowing merchants to share the risks and rewards of maritime trade.
Section 5. Medieval safety nets, guilds, and the seeds of life insurance. The Middle Ages, often depicted as a period of darkness and uncertainty, witnessed the blossoming of a unique social structure, guilds. These guilds were more than just professional associations. They were lifelines for many individuals during a time when social safety nets were virtually non-existent. These organizations, composed of artisans and merchants practicing a particular trade, played a crucial role in providing their members with a sense of community and, more importantly, a safety net against unforeseen misfortunes. Guilds were structured to ensure that their members could rely on each other for support, both professionally and personally. Guilds acted as early insurance providers, offering financial assistance to members who fell ill, became disabled, or faced unexpected hardship. This assistance was not just financial, it often included emotional and social support, creating a strong bond among members. Dues paid by guild members were pooled together to create a fund that could be drawn upon in times of need. This collective pooling of resources was a revolutionary concept at the time, laying the groundwork for modern insurance systems. This system provided a crucial safety net, ensuring that members and their families wouldn't be left destitute in the face of adversity. The sense of security and mutual aid fostered by guilds was invaluable, especially in an era where other forms of social support were minimal. Furthermore, guilds often provided support for the families of deceased members, a practice that foreshadowed the development of life insurance in later centuries. This support could include financial aid, assistance with funeral arrangements, and ongoing help for the widow and children. These early forms of social insurance highlight the enduring human desire to protect oneself and one's loved ones from the uncertainties of life. The legacy of guilds is a testament to the power of community and collective responsibility, principles that continue to underpin modern insurance practices today. By understanding the origins of these systems, we can better appreciate the evolution of social safety nets and the importance of mutual aid in human societies.
Section 6. The birth of modern insurance, a revolution in risk management. The 17th century marked a turning point in the history of insurance with the birth of modern insurance practices. England, a nation at the forefront of maritime exploration and trade, became the cradle for this financial revolution. Coffee houses, bustling hubs of commerce and intellectual discourse, served as the unlikely birthplace of this transformative industry. It was in these coffee houses, particularly one frequented by merchants and seafarers, that the concept of a more formalized and sophisticated system of insurance began to take shape. This led to the establishment of Lloyd's of London in 1688, an institution that would become synonymous with the insurance industry itself. Lloyd's of London provided a centralized marketplace where ship owners, merchants, and underwriters could come together to negotiate and secure insurance coverage for maritime ventures. This innovative approach, based on shared risk and specialized knowledge, revolutionized the way insurance was conducted and paved the way for the development of modern insurance practices.